Hello, and welcome to new update from the markets middleman. So we all woke up last week on the news of the war that started last week, and to be honest, it had affected me psychologically and mentally due to what's happening in the region. And yeah, this affected a little bit, but this is why when you're not feeling good, when you're mentally not stable and emotionally not stable, it's preferably to take a space. And this is what happened last week. Instead of just forcing yourself to focus and forcing yourself to perceive setups, which might actually backfire at you. So each now and then, it's healthy to take space from trading, whether you're passing through some personal stuff or it's just like a collective, massive thing going on into the globe. However, just taking some relax during this weekend, updating the charts and trying to recharge and start next week because this month is starting really big. So, with that being said, back to the charts and with the update as usual from the DXY. So if you remember from the last update, I was waiting DXY to just rotate back down to take the sell side, tap into an H1 fair value gap, and then push to the upside. But the market didn't waste any time by just going back up, displacing higher, and creating this displacement to the upside since Monday and Tuesday. Usually, some geopolitical risks, money flows back into the USD because it's a safe haven, and it's still, until this day, the world biggest reserve currency. So it's a risk off asset or risk off currency. When there's some chaos, stuff like that, people are uncertain, they usually tend to go into the US dollar instead of other currencies. But anyway, uh, this actually affected the DXY and the dollar currency in general, and I think it will still affect it until anything or until something major happens, or a shift in market, or maybe some cool down for the war and stuff like that. So, but at the end of the day, I want to look into the chart and see what the chart is telling me. So the chart had told me already that we displaced higher from this range over here, and yes, we reached a buy side, which is the high of January, which is amazing and very important. But with the overall structure and knowing that since January, price had swept those sell sides and refused to stay bearish. So if DXY wanted to be bearish and still go down, it could have done it from here. So after this day, if the bias was still bearish, you would have seen already the continuation. But price refusing to go down, consolidating. After this consolidation, it was clear that price wants to move up. So with the launch of the war, DXY displays to the upside. And I think there's still more potential to the upside. First, to clear this buy side once again. Second, to reach the high of November. Those two relative equal highs over here. And especially that on EU and GU will confirm that you are bearish on the higher time frame. So I think this supports the narrative of DXY going much higher from the current levels. So when I'm talking about going much higher, it's simply after balancing this important daily fair value gap over here, which was created by the high of Friday and the low of Tuesday. And see, it already created sell side from Wednesday and Thursday. Friday took the high of Thursday and couldn't displace higher. So this buy side is still open for business. But before we reach this buy side, I think on Monday, Tuesday, price would retrace a little bit down to balance this daily fair value gap and then push higher into this buy side and this buy side from November. A quick look into the lower time frame and to see what price did this week. I really think there was nothing much going on, so I'm happy I took a break in a week that didn't gave a lot of setups, because after the weekly open, I will show you this also translated on EU. So market opened with a gap, then just made a couple of days displacement higher, and then consolidated for the rest of the week. Yes, it made the reaction from a 2-hour fair value gap, which is also a 6-hour with a breaker, but this displacement already sent price higher, but it couldn't displace higher and change the market structure to turn bullish. In fact, it was still consolidating. It was valid for short-term setups maybe, here and there, yes, but not like something that is very clear on the higher time frame. So the reaction that we've got was from a 2-hour fair value gap, but I think this had already created enough sell-side liquidities for price. And notice the last couple of hours from Friday confirmed a displacement below this breaker over here after sweeping Thursday's high. So price swept yesterday's high of Thursday and displaced lower. So on the hourly time frame, we are bearish. On the daily, we're still bullish. So we want the hourly time frame to turn bearish, and we want to see a continuation to the downside just to finish this potential corrective scenario into the daily fair value gap, and then I want to see price resuming bullish from around 98.43 into 98.35. So the plan is clear and simple for the DXY going into the next week. How to translate this for trade setups on the EU-GU, this is what we're gonna see up next. So if we look on the charts on EU, we see the potential of a huge displacement to the downside following up with this trend that had already shifted. So we've shifted from, I think in my opinion, we've shifted from an uptrend, okay, making higher highs, higher lows overall. But after this push to the upside and how price changed the market structure first time, we were anticipating a retracement into this daily order block, but unfortunately we couldn't see it. Price consolidated for a few days and then displaced lower. I just want to show you real quick what happened on the market open, okay, after the gap lower. But this happened during Asia session, so in my local time it's 5 a.m., which I'm like obviously asleep. But I wanted to show you. Imagine that this is just a red candle, okay? Because the gap is just for price that wasn't filled, but since the gap was lower, just imagine this as a red candle, okay? Then what happened in usual or in normal market conditions, this is an A++ setup whereby price made an SMT divergence with DXY and GU, okay, and then price displaced lower, not reaching the major sell side yet, and rotated back into the breaker. So this was Asia open. Before 1 hour of Asia close, price confirmed that it does not want to close back above this breaker and made all of this sell off to the downside. So this was a massive opportunity, but by the time I wake up on London session, it was almost gone. And I don't think there was any potential setup after this price action over here, after this moment over here. This was all a range, and I don't think there was any potential setup that was like very obvious from the EU. But anyway, moving forward into the next week, what price created is two daily bearish fair value gaps. First one was over here, and second one was over here. Now, here's the thing. I have a couple of areas of interest for EU. But first, you need to eliminate some options in order for you not to be mixed out and confused. So first, I'm not gonna be stubborn on waiting price to fulfill this daily fair value gap. Why? Because it's high a little bit, and maybe by the time price reaches this level, it would be already bullish. Now, I'm not assuming that this is not gonna happen. Those markets are crazy, especially with this volatility. It's easy for price somehow to just make it tip uh, to balance this fair value gap by few pips and then close the day back below here, below this fair value gap. So I don't want to see, what I don't want to see first is the day inverting this fair value gap. But even though it did, I'll still be convinced that we're overall bearish. Why overall bearish? Because Price is coming from a huge and critical point of interest. Okay, it broke the structure for first time on the hourly basis. Then it broke the structure for the second time, and it left a sell side liquidity that is untapped. So even though price wants to be bullish in the future, I think the possibility of sweeping this sell side first is very important, as well as this one and this one. So overall, my target for EU is to sweep this sell side during this month. Okay, whether price rotates back up here and then push down, or even though price wants to give us a retrace into this imbalance over here and push down. I think the ending goal of this price action till now is sweeping this sell side over here, which comes from November 5, aligning with the buy side that is on the DXY, since those two price actions are an opposite. So the alternative, okay, and if I see a reaction before this daily fair value gap, it's gonna be from the following. I'll scale down into the 12-hour time frame. I love the 12-hour time frame because it divides the daily into two candles. So every day I see two candles instead of one. So this gives me a little bit of extra information in order for me to dissect price action. If you remember and if you watch the update from Tuesday, January 20, I spoke about the significance of this breaker block on the 12-hour time frame, and I've spoken about the possibility of continuation higher. And it was really a great setup for me and the team in January, and we were able to capitalize on this move into this buy side. Some got out at this level, some got out at this level. Of course, no one could have imagined to hold the trade up until the daily fair value gap, but it was really great, and GU actually offered us a continuation within those days over here. But anyway, the significance of this 12-hour breaker is still here. Okay, and if you just grab this breaker to the past, you see how important this level was for the EU. So we've seen it was a buy side, sell side, creating an imbalance, then created a breaker over here, broken to the downside, corrected back, took it as resistance, then this level still supported this price and shifted to the upside and made just huge potential move. I've set here an HBOS, so this is an hourly break of structure. Yes, I don't see a daily close below the sell side, but I already see the overall structure, and I already see that within the hourly time frame, probably on the 6 hour and all of the hourly time frame really, price was able to close below the sell side. So it already broke the structure to the downside. Without further ado, I see the potential for a retracement back into this level over here is really significant for the EU. So you see EU shifted or went down higher, or sorry, more than GU. So I think price is still correcting itself after this massive move. So I'll treat this as an independent wave, and I've taken a feeble level from this wave. So I don't want to be shorting anywhere below the 50%. I want to be shorting from the 50% and above, just to make sure I had an optimal entry level. So if I include also the 61, which is really good, I get into the daily fair value gap. But I mean, if I see the market start shifting lower from this 12-hour breaker, which is also a daily fair value gap, then I'll be open-minded to continue and push lower from this level over here, which was really significant. On the 6 hour time frame, it's a 6 hour couple of order blocks, the only order blocks within this displacement to the downside. And if you've been watching a little bit of my updates, you already know how much the order block that comes, the only order blocks that comes within a wave, equidistant wave, is really important for price, and usually this triggers the reversal or continuation within the trend. So I'm treating this as a confirmation. Okay, I want to see a slight confirmation, break of structure, and then I will join sellers. Or if I see price still not respecting this area much, here I want to be aggressively monitoring price for a continuation lower from the daily fair value gap. Last but not least, on the 4 hour time frame, this was the last fair value gap on the 4 hours. So there's really very nice business to deal with within this area on the EU. So overall, I'm still bearish. Maybe short term, there would be some nice potential bullish setups, but all is gonna be into the point of interest, same as I did on GU last week, which I will show you in a while. So this is the setup for the EU, either a continuation from the 12-hour breaker block or from the daily fair value gap, but ultimately I want to see EU trading around this sell side over here during March. Moving forward into GU, and we also see how price traded higher. Unfortunately, it couldn't reach the daily fair value gap, and I based a long trade last week in anticipating that price is gonna balance this daily fair value gap, which was really important. But unfortunately, we don't always see what we want to see from the market. So this becomes valid for the future. Maybe I don't know, months or maybe weeks, years. I don't know when this would be balanced again. Just like this fair value gap, for example. There's no urge or there's no necessity for price to balance it right now. But if we go into the future from September into January, see where this daily fair value gap worked, and it was the reason for price to push lower. So this would still be important, but I don't think for now, because if price reaches this daily fair value gap right now before it sweep the sell side again, or before it like continue pushing to the downside, I think the bearish bias would be terminated for this mean. But anyway, we've seen how market opened with the gap lower, retraced back, and then pushed to the downside. I mean, same as EU, this price action wasn't really tradable on GU. If we just check the 4-hour, for example, you see that after this push to the downside, maybe here intraday, yes, there was a potential sweep of this candle and a continuation to the downside. But after that, there was really no clear structure whatsoever on the lower time frame. And what price did is that on the hourly time frame again, it already broke the structure to the downside. So this was the last breaker, last point of defense for buyers within this huge uptrend. And if we were able to close below this, then price would open new bearish territory to sweep, such as this sell side, which was already swept, and the sell side I think is very important to be swept as well as this one at least. So without just expecting a huge sell-off, I think this sell side will eventually be swept within March. So same target I have for EU, which is a sell side that is in the bottom. Same thing I'm saying for GU. At least this current last week's low is open for business for GU. So you see I have a level over here. What is this level technically? This level used to be the bullish fair value gap, which I also spoke about for a potential reversal and continuation for the bullish narrative for GU. But of course, we used this as a draw on liquidity. So we tried to take a short position, but the order wasn't filled in anticipating that price will actually reach this level. So we weren't filled in, but price reached this level. But I wasn't going bullish from here because the day closed within this bullish fair value gap, showing weakness, and the DXY turned. So we just simply stayed on the sidelines waiting for price action for more information. So anyway, without further ado, I will make a separate video just to recap the trades themselves. I think it would be more beneficial than including them with the forecast. But anyway, this this daily level is still important, not just because it was a fair value gap and now it's an inverse, but because price really respected it on a closing basis, then displaced lower. And if I extend this level on the daily time frame, I see how significant it was also throughout 2025. So we've seen price created this breaker, okay, rotated back up, then took it as buy side, a little bit of manipulation over here, then also respected this level, took it as a support and broken below it. Now, this wouldn't be just enough for me to say, okay, this is the reason why I'll be shorting from here. I want a confluence. I want to align it with something else that really would make sense. you see, after price opened last week, it left a buy side. Okay, it left a gap that is still open. Okay, not fully balanced. So also created couple of buy sides within Monday and Tuesday. If I align this with a Fibo level from this wave into this wave, okay, from this high to this low, I see the 61 Fibo level nested just at this weekly high. So I have previous weekly high, previous weekly low. We can be trading the narrative simple as from last week's high into last week's low, which aligns perfectly with this inverse daily fair value gap, daily breaker, 61 Fibo level, and it completes the narrative, the bearish narrative, which is clear to the downside. But just be mindful that in the short term, price is already shifted the market structure on the hourly time frame into bullish. On the daily, it's still bearish, but on the hourly time frame, it already shifted into bullish. So at this level, you either gonna choose the optimal entry level to be able to protect your stop loss up here and target this low over here as well as this low, or you can simply wait for a market structure shift and then take or pull the trigger on a short position into this level over here. So I need to see at least 1 hour market structure shift to make sure that price is gonna respect this level and continue the narrative to the downside. Price is really trending hard this year. I really like how price and the volatility that is kicking in the markets. Yes, we are facing some challenges in terms of markets consolidating for some time. So usually it takes you like 3 days, or at least in my experience, it's taking me like 3 days waiting for a potential setup. But this is the real trading game. The real trading game is really with waiting your setups, waiting enough to see an A plus setup so for you to execute a simple execution. And it really works much more effectively for the long run than just forcing minor or small trades or just I'll try this if it works out. So I really struggled with all of those stuff, and right now I learned to wait patiently, even if sorry, even if I'm gonna wait a week, a full trading week without taking any execution. I'll still do it, and I'll still know and believe that I'll end up being profitable just taking one good trade in a week or maximum two trades in a week. That would work really fine. So, um, with that being said, I think this is the plan, very plain and simple, for next week. So, as you know, I don't usually include gold in all of my forecasts because I don't trade gold primarily. But from time to time, I see like really good setups on gold, and I'll be interested to trade them. And this week, I think there's something really significant taking place on gold. So we all expected gold to be bullish due to the war and stuff like that, and we were actually bullish from this daily fair value gap, and we were targeting this buy side, but unfortunately price couldn't reach this buy side. So uh, this was the last bullish narrative before this sell-off occurred and took place on Tuesday. So right after this sell-off took place, we directly changed the market structure, and we stopped looking for potential longs on gold simply because it broke the structure to the downside. If you extend this sell side over here, you see that for 3 days price was closing, opening below the sell side, changing the market structure shift. And why this sell side is important, because it was the last low price created before it made a new high. And after making a new high, price broken the structure to the downside. So it was really significant how price pushed to the downside, and it was a little bit unexpected. But after thinking about what smart money does in the markets, then everything made sense. So the smart money was already buying gold aggressively throughout the last couple of years, anticipating, especially after the last 3 months from 2025, anticipating that something big and major is going to happen. And this was really the case. They were right as always, and price did actually react, and huge profits was already taken from the markets. We're talking about $5+ trillion. And all of this maybe, potentially, would be some manipulation for the rest of the world that gold is gonna go up onward. But what if it already went up enough and right now it's just like doing a normal and a healthy market structure correction after all of this push to the upside, price is just gonna consolidate a little bit instead of just keep on going up and making new higher highs. So I think the narrative of either consolidating for gold, I'm not saying gold is gonna crash, but I'm saying that I don't think after this push to the downside, and I might be wrong definitely, but I don't think we're gonna see aggressive buying on gold because I think the big money was already made, and right now it's about to get out and allocate the money into different assets. So also back to the charts and what the chart is telling me. It's telling me that after creating this high and displacing lower, price already created a bullish fair value gap, and with the high of Wednesday, it already confirmed a bearish fair value gap. So this is a daily BPR, which is the most important PD arrays in the ICT methods. And if you go on the charts and really observe the power of the BPRs, you'll understand what I'm talking about. So it's really significant when you see a bullish fair value gap and a bearish fair value gap within the same price territory. This means that smart money had already reversed, okay? And again, I might be wrong and price could just displace higher as if this doesn't really exist. But the odds are in the bearish phase. So this is the point of interest where I think price can go up and then sweep at least last week's low in addition to this low that was created in February. I'll just show you real quick on the hourly time frame what this level actually represents. So this is the daily BPR territory, okay? If you see, this is the only unmitigated fair value gap on the 1 hour time frame. So within the 50% of the daily BPR, okay, we see this 1 hour fair value gap. If I take a Fibo level from this way, because this was the last independent displacement to the downside, this is the 61 Fibo level right at this level over here. It's preferably not to see price trading much higher than the daily BPR, but I think this 6 hour fair value gap would still be open for business. So in case price went up a little bit from this point of interest, there it's gonna face this 6 hour fair value gap coming after a displacement. And this displacement, I don't think price reached a point where it can actually retrace higher. I think at least price needs to, let's assume that okay, price still wanna be bullish. I think the possibility of going bullish is at least comes after sweeping last week's sell side and this daily order block, last down closing candle before we've seen this push to the upside. So even though price wants to be bullish, I think there's still one more push to the downside. There's high chance that push to the downside could take place before we see a rotation to the upside. So if I'm gonna take any shorts from here, the first immediate target or draw on liquidity will be this level over here. If I see price did not respect much this level, then I think I'll wait for a retracement and then trade back into this sell side liquidity over here. So with that being said, just be careful with trading gold because it's usually manipulative a little bit more than other assets because there's a huge volume trading in gold. And I understand this, but if you really know the liquidities in gold and how the nature of gold works, you can be taking really nice setups. With that being said, it's been a while I haven't made an update, so it made sense why this update was almost 30 minutes. It's as if I made back everything that I haven't spoke about. But anyway, guys, I really wish you're all safe. I really hope that this week we're gonna be mentally prepared. The market is always gonna provide us with A plus setups, and the market is always gonna be here whenever you're ready. But what's more important is that really to make sure that you are mentally prepared and psychologically ready, emotionally regulated for you to be trading, especially in such conditions. So Me myself, I'm trying my best to be detached this week from noise. I will give everything its right, and when it comes to trading, I want to make sure that my mindset and my mental capacity is with me. This is the most important thing for you to survive and maintain a healthy, consistent performance moving forward. So, I hope you find this update useful. Let me know what's gonna be your potential preparations for this week, and I see you with the next week. Hopefully, we'll have some good news about the situation. So, let's go.